Hey, what's up, my friend? So in today's video, I want to share with you 3 unbreakable rules when it comes to support and resistance. Number 1, avoid buying lower highs into support. So here's what I mean. So for example, if this is an area of support and you see the price, right, goes up, comes down into support, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. At this point, right, you can see a series of lower highs coming into support. And why do you want to avoid buying into support? Because this is a sign of weakness. This tells you that the sellers are in control. That's why they are able to push the price, right, consistently lower over time. And if you look at the buyers, right, they are not able to take control. How do I know that? Because you can see that the buyers, they are unable to push the price right above the previous swing high. So every time it tried to rally higher, it couldn't even break above the previous swing high. So this is a sign of weakness, and more often than not, right, what happens is that the price is likely to break down lower. So avoid buying lower highs into support. And on the other hand, right, the opposite is true as well. If you see that this is an area of resistance, then you want to avoid shorting, right, higher lows into resistance. At this point, you can see a series of higher low, higher low, higher low, higher low coming into resistance. So the market, right, in this case, is more likely than not to break out higher. So that's the first golden rule that I have for you. Number 2, look to buy power move into support. So when I trade support and resistance, right, I like to see, right, the market making, right, a strong, in this case support, right, a strong move, right, into support. So in this case, I would see a series of candles like this, which are very bearish, strong bearish momentum candles coming into support. I like to buy, right, such a strong power move into support. So I think I share with you a chart you can see better. So in this case, you can see that this is an area of support, and look at this strong power move coming into support. Why do I like to buy into this type of strong power move? So I won't necessarily just buy because I see a series of strong bearish momentum candles. I'll still wait for a valid entry trigger to go long. For example, things like a hammer, a bullish engulfing pattern, etc. But the concept that I'm trying to share over here is that when you see a series, right, of strong bearish momentum candles coming into support, right, this is good because if the area of support holds, right, the price could just as well quickly reverse back up higher easily because there is no obstacle in the way. When you have a strong power move coming into support, okay, when you have a strong power move coming into support, you can see that the nearest obstacle is actually at this swing high over here, compared, right, with a choppy stair-stepping price action move into support like this, right? Let me give you an example, like this one over here. So you can see, again, this is an area of support, but this time around, the price action that leads into support is that you see a series of kind of like a lower high into support. And you can see that these are all obstacles in your way if you're a buyer, because this over here is where selling pressure could be lurking in the background, where sellers might want to short at this swing high or possibly this swing high. So you can see that from a profit potential standpoint, right, there's really a lot of obstacle, right, that you have to go through, right, for the price to move up higher. So if all else being equal, I always prefer to buy a strong power move into support like this because there is just no obstacle in my way, right, should the price reverse up higher. The nearest obstacle is usually quite a distance away, and that, right, improves my overall risk to reward on the trade. And finally, right, the third golden rule is avoid placing your stop loss just below support. So for example, if this is an area of support and the price goes up, comes down, goes up, comes down, and starts to go up, what you don't want to do is to place your stop loss just below support. Why is that? Because it is common, right, for the market to just come down lower, take out your stops, and then continue to reverse higher. So if your stop loss is just below support, right, you are attracting, right, or rather you're asking, right, to get stop hunted. Okay, so you need to give your stops some buffer so you can avoid, right, such a situation. And the way to do it is quite simple. So if this is an area of support, okay, so and the price goes up, comes down, goes up, and let's say it comes back to support and bounce up higher, you buy over here, your stop loss should ideally be somewhere about here. So this way, right, you give your trade room to breathe. And even if the market just does suddenly spike now lower, right, it's unlikely to reach your stop loss, right? And if it continues up higher from there, you've just, avoid being stop hunted. Okay, so let's do a super quick recap to what you've just learned today. Number 1, avoid buying lower highs into support because it's a sign of weakness. Number 2, look to buy strong power move into support, right, compared to those type of stair-stepping price action into support. Usually those are the type of price action that I would avoid, right, buying into support. And finally, right, avoid placing your stop loss just below support, right? So this way you can avoid getting stop hunted. So that's pretty much it, right? If you've enjoyed today's trading, smash the thumbs up button. Don't forget to hit subscribe below, and I will talk to you soon.